Good morning. Good morning, YouTubers, stock Twitters. We got ourselves a little market confusion. We going up, we going down. What are we doing? Well, we're just trading our tools, try to keep the noise at bay. This little program is what we call SMC Kickpoint. It's a little robot, and it's meant to trade this confusion. Oh, that wasn't me. That wasn't my stomach growling. That was Ted. Ted, he comes in and he sits like he's praying. What's he praying for? To go to the park. It's gonna rain, Ted. It's amazing. He sits up, and then he kind of snorts a little bit. His life revolves around his girlfriends at the park. So let's take a look at what time it is here. It is August 30th at about 9:15. And on a daily basis, for those that are interested, on the daily view, right? Intraday view, anything and everything goes. And that's why we will choose to run a particular style of chart, a particular strategy. Nothing really matters. It's pure price action. And it's really honest. It's a beautiful thing. And so we opted for this particular program. It's been running overnight. It's doing okay. We'll see how it does. We'll keep an eye on it. And we also have a swing machine up above. On a daily basis, we made a video for our members last night. What we have on the S&P, we'll look at the S&P primarily and trigger off of it. Why? Because it is, just so dominant, and everything else, just about everything else follows. But the S&P on a daily basis is pushing down into panic. Let's just try to show you real quickly here. Here's the S&P on a daily. See, we're down into here, in here. This isn't where I want to, even though the charts look really bad and the markets could go lower, very well might, but I don't want to be initiating on a position trade, even with options. I don't want to be initiating shorts here. And let's just throw the VIX while we're here and together. Let's just throw the VIX into a daily. And the VIX is up here. VIX could go higher. So markets could go lower. VIX could go higher. But what we're trying to do is use this tool to help us. Well, how do we want to trade this? What might we do? So what we're choosing to do is not buy puts. No. With the volatility increasing and options, this is for position trading, we're choosing to sell some premium and sell some credit put spreads with the markets being down in here. And we're going out about 30 to 40 some. We're going all the way out to like October 7th or so, thereabouts. That's what we're doing. Just a little bit, and if the market stays kind of sideways, those options will accrue to us. But could we get a flush? If we do get a flush, and we may miss that flush, we won't miss it intraday, but it will actually be setting up for a pretty good bounce. And we also are looking at the contract roll. This is usually in here. This is usually a very low volume time here. And the contract is going to roll probably on the 9th effectively, and then literally be dead on the 16th. Then we get the Fed in here. September is normally a lousy month. But with this period here, this little transition period, this is a pretty good area for them to try to manufacture a short squeeze. I wouldn't be surprised we see that today, but we'll see. For us, it won't matter because we're going to let our little program run. I'm Bagging on a Stock Market Caddy. If you have any questions about what it is we're doing, anything, let us know. If you want us to plug in any of your markets, any of your stocks, we can give you a perspective through the eyes of our algos. We're happy to do that. And we can do this too, by the way. We can trade robotically a stock, but it's just that some of those may not be, well, they won't be as liquid as a futures contract. And so it's we make better use of our capital. Swing machine, if you're looking here at 6:43 a.m., the 1 minute turned down, up 1,500, 724, 1,200, 755. So swing machine has got the NASDAQ short. That's not what we're trading here, but we always try to keep swing machine plus kind of ever present in our view. Now let's just take a look. We can drill down. Let's look at a 1 hour. Where are we on the hour? And we're right in the middle, right? We're right in the middle. So this market still could go a heck of a lot lower too. And that's fine. I'm not taking any scalps. I'm gonna let the machine do its thing. And for those that are passing through, we do appreciate the retweets and smashing the like button. It helps us, and we will do this periodically. After the summer, a lot of these videos will be by invitation, probably only, these spot views. So you want to make sure that we have your email if that's if you're interested in that sort of thing. And in the meantime, any questions, let us know. We're 10 minutes from Swifty. You know what Swifty is, right? Swifty is the little rabbit they used to call out in front of the dog track. If you like to trade stocks and you like to trade options, we're going to be showcasing for our members, hopefully as early as next week. We've been working really, really hard on some new tools and even some new education for options. And we want to be versatile in what we do. So what we like to do, I say we, Susan and I, with our bread, we like to trade intraday, the futures contracts. Occasionally we'll go overnight, we'll stretch it. And then for position trading, we prefer to use options. Now we will sometimes buy shares and sell covered calls or short shares and sell covered puts. We'll also do that sort of thing. But we've been trading options a little bit more. And and doing it in a little bit different style than we had been. So we continue to learn and to push the envelope. And when we do that, we always see new ways, new tools, new things that we can do. So we've been writing some programs that are going to be, we think, an asset for us and for our members. We share everything that we do with our members. So they get not just the tools, but the education and the perspective, and they're versatile so that these tools can be adapted. They can be able to take it and play in a manner in which that they want to play. So you'll be seeing that in the weeks, hopefully weeks and months ahead. Now we're going to continue to let this run, and we're going to let it run through the open. But understand, it's up to you as a trader what market you choose to run, how much leverage you choose to run, what time you choose to run, but also when do you stop? We could stop right now. We'd have 287 plus 130. How much is that? $400 or $500. You could stop. You have the discipline to stop trading. We're going to continue here, but we don't have to. Is it cheating? I suppose so. I suppose so. Imagine that. I mean, you don't have to play a 9-inning game. You can stop after the 2.5 innings when you're ahead and say, you know what? I won. Why not? You know, or you go, you're playing golf with your buddies for a day. You go out and you play for 4 holes and you're ahead and you say, you know what? The game's over. I won for the day. They look at you like, what? You can do that. You should do that. It takes the discipline. You want to start your days early, start your week early, start your days early, and do quit. Now, we're here, and so we will, push the envelope a little bit. But in the beginning, we suggest to everybody, not just in the beginning, but down the road, start early, quit early. Force the market to pitch to you. You want to get in the habit. You want to be trading and generate cash flow. And don't lose sight. There are 20 trading days, 20 trading, 24 if you count Sunday nights. $100 a day is 2,000. 200 is 4,000. 300, right, is $6,000 a month. But do you have the patience to chisel, chisel, chisel? That's where the machinery can hopefully come into play. We are running a strategy SMC kick point 1 mini, and I'm going to send to our members the a little chat function, the specific settings. Now I could intervene. That is, I could manually come in and oops, and there's the bell. And do some scalping. I'm going to try not to, but if I need to, I will. But the bell has just sounded and we are underway. Now we could put profit targets and stop losses on the strategy. We could, they could be built in. Well, they are built in, but we did not. We're watching the radar, the full radar. We can see weakness in the Russell. It's a little disconcerting here for the overall market to see weakness in the Russell early in the day. It's almost an indicator in and of itself. It can be a marker for risk appetite of the small caps. And so we're looking at, let me just show you real quickly. We can look at the full swing machine. And you can see all the markets here are ES is short, NQ here, and then the Russell. So they're all selling down right now. It could be a little bit early. Well, it is early for sure. And we're going to let the machine handle it. Okay, I manually and a little position window stuck, and that sometimes happens. We have manually come out of that little trade, and our position window has stuck. That's my cache in my computer. That will refresh itself. But I was seeing a little bit of struggle. We had a low down here at 1:30 this morning, and that was earlier, and it was kind of struggling here. So I opted to protect our profits and to come out of this little trade here. It will recycle and we'll be in gear. But I didn't like what I saw down in here. So I chose to, and I'd rather not, but I will occasionally come in and try to help a strategy if I can. We'll see if I did. Maybe, maybe I didn't, right? Um, those of you that are watching on YouTube, what we're trying to do is we're trying to be robotic mechanical traders, and so that we can park the narratives and not be emotional with our trading. Try not to trade the money. We're aware of the money. We're aware of the score of where we are. But what I was looking at was this low over here, and that was, that was hours ago, 8 or 9 hours ago, and she seemed to be struggling. So I thought, I don't want to take a cheap hit. So again, that position window is stuck. It'll do that sometimes. And I'm not sure what it is. If it's my computer, it's what I guess they call it your cache, your temporary cache, and it will cycle and refresh out of there. So we're not, we're not in a position. We're currently flat. Strategy is still short though, but we're flat. Was also influenced by the small caps. I can see the small caps on another screen, and the small caps looks pretty steady down here, folks, at around 1885, 1888. We'll see if that area can hold. If they can hold that area on the small caps, and they decide to run those things and get them back above 1900, I think it could be a marker for the market to be that we get a little rally here. That's what we're thinking. And I see what you're saying. Everyone's saying, well, you shouldn't have done that, Bagger. You shouldn't have closed it. You would have made a lot more money. Okay, you're right. Remember, is we're running SMC kick point, no profit, no stops, the length 3, NQ 3 line 1 to 1 minute. That trade that I came out of, that trade is up about $800. So that's why we really, really do try to stay out of its way. For those of you that like to trade options, we're working on a tool that is not only going to tell you when it is optimum to enter an option trade, but will also tell you what style of option trade is optimum. Should it be a covered call? Should it be a naked put or a naked call? Should it be a credit spread? Should it be a debit spread? It can be very, very powerful. And I'm getting a lesson here. Oh, man. Mm. Okay, we were just sorry about that. Just conversing with Susie on some of her option trades, which are doing pretty well. Lesson there, I second guessed that. We're out, we're flat, but this trade, look at that. Holy smokes. That trade that I took us out is up in a minute. $1,800. 1,800 bucks. That hurts. Swing machine is completely red. So very heavy, heavy market this morning. Let's give everybody on YouTube a view. Completely red. They're in a selling mood. This is where, though, on a daily basis, see the S&P, we're pushing into panic. I wouldn't suggest, we won't, on any trades, any money that's going to go overnight. I wouldn't go short in here. I wouldn't initiate shorts here, not now. And the VIX really should be up here, and it isn't. It's only at 70. It should be up here if they were really, really fearful. So I'm a little suspect on this move. But that's for a position basis. Intraday, we don't have to be as concerned with that. It's really pretty removed. And I need to just, let the machine do its thing. So we'll see. But coming out, and that was, if you recall, we're over here, and I was thinking, she's holding that. She was showing a little bit of strength. It was the market open. I thought, I'll go ahead and I'll come out of it. And I did. So we didn't lose any money. But had I stayed in, that's $1,800. So we'll see if we can catch it or the machine can catch it on the way back. What is kick point? Kick point, our members know what this is. When you go golfing and you go shopping for golf clubs, you have different types of shafts on the golf club. And there is what they call a kick point to a golf shaft. I don't know if you know that or not. And the kick point can be very low, very high, and it can impact the flight of the golf ball. Kick point is a strategy that is trying to pick up on the flex point of the price action. That's what it's trying to do. And I can't tell you, I can't look at it and tell you or anyone, specifically where it's going to react. The computer is measuring it and doing it. Now, the back test, which we will use as a model to measure our performance, is pretty strong. Now, there could be a little bit of spuriousness in this. There always can be with these advanced bar types. So for those that are watching on YouTube, please understand, I'm not presenting this as You know, you run this and this is what you will make. But we can look at a performance report and get an idea. And this is what we're looking at. So that we'll measure against. Sometimes, you know, a back test might show just like that. It might show that over a period of 2 months, you know, it's going to make or would have made, you know, $45,000. When our members are running a strategy, what they'll do is they'll measure their performance against those back tests. Maybe they do better. Maybe they only do 50%. Maybe they only do 30%. That would be the efficiency. And that's what they're going to be aware of. So when they look at the back test, and as they might go from market to market, they can say, well, you know, they wouldn't throw out the back test. It would say, oh, that's not accurate. I'm going to throw it away. I don't want to do that. But they might say, you know, the efficiency of this back test is roughly 30% or 50%, or maybe it's higher. 50% is just fine for most of the time. On the other hand, if a back test looks like crap, then we don't run. And what happened was this market, I thought the market was really, really choppy. And I was looking last night at some various strategies, and some of the strategies that I had been favoring weren't looking so good. So I started, you know, looking at other strategies that we have. So strategies can come in and out of favor as the market does what it does, which is, you know, change. So I'm not going to try to trade this manually. You know, I can see what you can see, the price coming back up. But and Swing Machine is showing us, Swing Machine is still short, and you can see the buying pressure though on the at a 1 minute level. Now this isn't trading Swing Machine. It is not. We could be, had we equipped, you know, a program to run Swing Machine. Yes, you would be up that amount of money on any one of those intervals. But you know, so but we can see it here. We can see it here. There have been, since 4 a.m., there have been 4 long trades and 3 short trades on the 1 minute. And on the 5 minute, there's just been 1. And that was at 7:55, just 1. The position I waved off, $2,000. Mm. Mhm. Now, yesterday, I won't open up our option chain, but Susie was putting on some options. One of the options that she was put on, I think they had earnings, was Baidu. Baidu. And Baidu was trading just underneath 150, 150. And it was in, on a daily basis, it was in euphoria. They were euphoric. That told Susan, that isn't something we want to buy. That is something we want to sell. Then we also looked at the implied volatility. And the implied volatility was through the moon. It was high. It was like at 150, 160%. Why? Because I think they had earnings either today or they were soon. So when we have something that is euphoric and we have something with high implied volatility, what do we want to do? We want to sell, but we want to define our risk. So we come in and we sell a credit spread. We sell 150, and I think she took that credit and either bought a 155 or 160. I think it may have been 10 point wide. Baidu this morning is down 10 points. And the volatility will be just, or the implied volatility will have been really knocked down. So she's going to have a big fat winning trade on her hands there. She's going to be very happy with that. Options are, they're, I want to be careful how I say this. I'm not going to say they're more difficult necessarily, but there's an added degree of complexity to them because of the time element and implied volatility. And so a person really needs to understand, as I'm looking for my chart here, bear with me, understand what they want to do. It isn't enough just to get the direction right. If you're looking at a chart for options, it's not telling you necessarily where you are on the field, and it's not telling you, where you are with implied volatility. So the new tool that we're building on, and it'll come with a little education package, is going to guide our members. There's won't be, nothing is definite, but it will have a process. So we continue to bleed down here. Very nasty look here. Let's take a peek while we're here. Look at, here's Swing Machine. We got some things blacked out here, and I don't mean to. That's on the strategy. Let me just clear this for a minute here. So you can see the 5-minute interval went short at 750, 1800. NQ 755. It's only one trades too since 4 a.m. So if you got up at 4 a.m. and said, I'm going to wait for the first 5-minute trade, this is it. You're up 1800. Now, if you take your money, you take your money. Nothing wrong with that. Take the rest of the day off. If you took this one, $2,200. At what time? 755. Isn't that crazy? The YM, 755, one trade. And then the Russell was at 725, went a little bit early, right? Led the charge, one trade. Any one of those is a very fine trade. Look at oil, 4:55 a.m. One trade. Since this counter starts at 4 a.m., we set the time, so we count the trades from 4 a.m. It went short at 4:55 a.m., $3,800. Net gas doesn't look right to me. Do we have the right contract? Yeah, I think we do. 8:30. Could that be? Yeah, it could be. I'll double check that. Let's slide back to our little program here. And this, look at that. Well, there's a lesson. Stay the hell out of the way. Oh, man. I'm always a little guarded around the open. Good morning. New to the channel. Can you explain brief? Yeah. Thank you, Crystal. I didn't see your question there. Crystal asked, good morning. New to the channel. Can you briefly explain what I'm looking at and how it can be useful to me as a trader of stocks and options? Absolutely. We are, and thank you for coming by. And let me, we'll keep an eye on this, and let me kind of share with you as to who we are. First thing is, it's a small miracle you found us, because we don't really advertise. And we've been doing this. My wife and I have been doing this and trading in this fashion now for, it's scary to think, like 20 years. I'm older. We've been involved in the market since 1981, but we've been trading what we call robotically or mechanically, since the last 20 years. And so we're trading futures, but let me show you with stocks. Let me bring into view what Crystal wants to know. It's like, okay, what is this guy doing here? And how might this help? And rightfully so. How might this help with stocks? So let me bring a stock view into view here in a minute. Let me show you. Bear with me. Now we have a number of algorithmic tools to trade stocks, and let me okay, this is I'm going to do something here. I'm going to try to bring this in. So we have, Crystal, a number of tools. Let me bring this into view if I can. Oops. Let's see here. Bear with me. We have a number of windows that are open and I'm going to try to, here it is. Okay. All right. So this is just one of them. This is for stocks. Let me clear some writing here so we're not disturbed with this. Okay, so this is a tool, Crystal. This is what we call SMC, stands for stock market caddy. SMC trade generator. This is called Pebble Beach triggers, and this is actually giving us trades today. Today is the 30th, right? 30th, right? So this is actually sorting automatically. And these are trades that are being populated. These are all sell signals. We had one buy. It's actually on, is that Bed Bath and Beyond? Best Buy. So it's actually telling us to either sell or buy. There are, how many here? There are 20 trade setups that came through all today. And here is the entry price, and every single one of them is profitable. And it also gives you the stop price. And you can, now the purse is based on the amount of money is based, you can set this, let me see exactly where this is, bear with me. It is set on a $10,000 amount, but you could set that at $5,000. You could set it at $1,000. That will calculate the purse. And of course, if somebody was trading options, they'd be doing even better. And we can have this, and this can be sorted. So this gives us the trigger. There's a lot going on here. There's a lot more information here. But to give you an idea on stocks, let's go to this what we call the swing machine. And I'm going to go to try to find the S&P 500. So bear with me. Okay. So this is what we call the swing machine. And let me just erase this so you know. So we have 500 stocks in here. And this is the tool. It's called swing machine. It tells us whether we want to be long or short. It gives us the entries, tells us how many, and this is on a daily interval, a daily. And then this gives us a whole lot of trend information. You don't even really need to look at a chart. So what you want to know is, out of 500 stocks, if I had taken these signals, where would I be? So I'm going to sort the trade purse. And this also is based on let me just double check. I think it's a $10,000. Yeah, a $10,000. So it could be 5,000, could be 1,000, or it could be the number of shares, but this purse reflects a $10,000 investment. We're going to just scroll down. I don't have time here today to completely in service, but out of the 500 stocks, and you can see they're either long, short, dipping, or ripping. And out of 500 stocks, we'll come down. I'm not trying to make you dizzy, but don't let me make you dizzy. It is profitable out of 380 some odd stocks. It's generating short entries on new ones. So out of 416 of the 500 stocks, it is either profitable or flat because they're new, and it's generating short entries. It's decision-making trading software. And then the remaining balance, yes, a swing machine will have drawdowns. It will have losses. But what it will do with much more discipline than me is execute. So you really have to work hard to, override it. We're not presenting this crystal as any kind of crystal ball. And we have about 60 or 70 proprietary indicators, show me studies, strategies that can help one trade or actually do the trading itself. This is actually trading. What you're looking at here is the NASDAQ futures, trading intraday on a 1 minute time frame. There are only 4 ways to trade, though. You either trend follow long, trend follow short, counter trend short, counter trend long. That's it. There's only those 4 ways. There's no Bible code. There's no, super secret formula. We're not saying that, but how one analyzes price, if you're doomed to moving averages and MACDs, I would say, it's, a hard way to go because they lag brutally and they don't give you any information to manage the trades. So that's, and, so everything is built around those 4 styles of trading. You want to be able to identify on every single trade that you do, is it a trend? Is it and everyone wants a trend, or is it a counter trend? Need to be able to know that because the characteristics of those different styles of trades are different. And if you don't know the style of trade you're putting on, you can't have expectations. And if you can't have expectations of what it is you're doing, then you have anxiety. And if you have anxiety in your trading, then that's not good. Right. So we're doing everything we can. This came to be built, Crystal, in the early 2000s when I wanted my wife, Susan, to do all our trading. So, and Susan was extremely risk averse. And so I started building her these tools to help her overcome her fears. And that's how we came to get where we are. And then at about 10 years later, we started Stock Market Caddy and started introducing these tools to the public. We're not huge by any means. And we don't want to be. We only accept that we're a mentoring site. We don't make specific recommendations. So it's going to be a little bit different than probably everything else online. We don't make specific recommendations to buy or sell. We don't make any claims, but we're a mentoring site. So if there's a person that says, geez, I want to know what you know. I want to do a little bit of what you do. I want to assimilate it into what I'm doing. I'd like to have some of these tools. This is how I go about things. That's what we're geared to do. Does that make sense? I hope so. So it's kind of a broad question, but I thank you. You are on delay on YouTube, right? And we don't do these YouTubes like every day. We just do it periodically to create a little awareness. Our members that are here, we have members that are watching on Zoom, some, and they've heard all this before, but they also well, congratulations, Crystal. They also have all the tools on their desktop. And Crystal says, thank you. I understand. I just had my first ever 3 green days in a row. I just want to be better at identifying great entries. Yeah. I could ask you a few questions. What type of trades did you put on? Do you know? Do they work? Oh, okay. Okay. And I'm moving. I lost my view of YouTube. Yeah, I put on an Amazon this morning. I took a put on Amazon. Yeah. Yeah. You bought a put? This is, if you're new to trading, welcome. And I want to give you a perspective and something to think about. Okay. First, congratulations on a good start. Um, there are only recent, mostly scalp options. Yeah. How do you keep score, Crystal? Do you know how to keep score? I'm asking some annoying questions. um, I don't know how. Okay, well, that, you know what? Um, I give you credit for that. There's a lot of folks that are afraid to, and shouldn't be afraid to, admit something that they don't know, and that's, I see that as a sign of maturity and learning, is recognizing, becoming aware of something you don't know. I'm gonna share something with you that you'll have the rest of your trading life, and hopefully you have a good, long, profitable trading life. Um, but if you do or you don't, it will come back to this. If you don't know how to keep score, then it's not possible to know what you're doing and to be able to make adjustments. So it's critical to understand how to keep score. And I draw a comparison to a golfer. A golfer may not be a golfer, but he has a score, but he also, his caddy will also, and I don't do this for people. I can't, I don't have this type of granularity, but we teach them to keep their own score. But he's going to want to know, how many fairways did he hit? How many greens did he hit? How many sand saves did he hit? He wants to know the internals of his game, so he knows what to practice on, what's working, what isn't working, right? So keeping score and knowing how to keep score is critically important, to know objectively how you're doing, and also learning to become better and better. When you tell me you had 3 green days, um, that's great, but it tells me that you're judging your performance on the money. Green Day made money. Feels good, right? Feels good. Um, I'll lay out this example. If you have a week, or if a trader, I'll take you out of it. If you have a trader that makes $10,000 in a week, gross profit, $10,000, but he loses $5,000, right? So he has a gross profit of 10. He had a gross loss of 5,000. He nets $5,000. That's trader number one. We have another trader that for the same week, he grosses $1,000. He has gross losses of $200. He nets $800, right? They both had green weeks. One netted 5,000, the other netted 800. Who was the better trader for the week, and why? Do you know? Who would you think? Timo, how are you, Timo? Well, Timo knows. Timo's heard. Um, it's right. It's the second trader. Now, most people will think, oh, it'd be the first trader. He made 5,000. Second trader only made 800. And they might even do that to themselves. You know, they might say, honey, man, I didn't trade very well this week. I only made $800. Last week, I made $5,000. There's a couple of things there. No, no, it's not percent. No, it's not percent. Yeah, see, and that's the problem. See, Wall Street has everybody and CNBC has everybody, um, green day, red day. That's not good because that's greed. That's greed and emotion, greed and fear, less loss. Well, close, close, but there's a little more to it. See, if you have, I'll just address these. This is actually good. If you try to do it on percentage, which is what everyone has you focusing on, that doesn't tell me anything. Because if a trader has a 10% return, somebody might say to me, oh, I made 10%. Okay, on what? 10% of $10,000. So what? 10% on 100,000. Now, if it's 10% on a portfolio of 20 million or something, okay, I get it. That's good. But 10% on what? Doesn't tell me anything and wouldn't tell you anything. 10% on a $500 trade, you can make 50%, 100%, 200% on a stock option. And if you're motivated by that kind of return and think that's going to be repeatable, that can be very misleading. Let me just take a peek at the swing here. The other metric that most retail folks will look at, they'll say, well, I won 9 out of 10 times. Or they're impressed by that. 9 out of 10 times I won. Well, that doesn't tell us anything either. Because you could win $1,000, 9 times in a row, 9 green days in a row. And then on that 10th trade, you lose, 20 grand, right? And so that doesn't tell us anything. So somebody could have, 10% return, but not making any money, really. Somebody can have a 90% win rate and be losing money. And new traders, there's an expression, it's rather crass, but it's very common. Well, there's a better metric that evens the score. And I'm going to explain exactly what it is. But I just lost my train of thought on but the win, but percentage return isn't going to help. The win-loss ratios are worthless. They don't tell you anything. So what you want to do, there's something called profit factor, and that will keep your trading honest and can be comparable to anybody, including me. And what you do is you take your gross profit and divide it by your gross loss. So in the first example, the gross profit was 10,000 and you divide it by 5,000 and you have a profit factor of 2. So what does that mean? That means the first trader, for every dollar he lost, he made 2. That's good, but that's average, right? The second trader, and I'll explain what the metric. The second trader, he had a gross profit of 1,000. He had a gross loss of 200. He netted 800, and his profit factor is 1,000 divided by 200 is 5. He made $5 for every dollar he lost. That's superb. You see, because if your profit factor is 1, you're just breaking even. If it's below 1, you're a losing machine. You will lose money over time. If your profit factor is 1 to 2, that's average. 2 to 3, I'd say above average. Anything over 3 is a money-making machine. Now, we have members that will have profit factors of 80 in a week, and then drop down to 20. It will fluctuate, but it keeps your scoring, it keeps it real, and it keeps it balanced, and it tells you what in essence you're doing. If you don't know how to keep score and you are only counting green and red days, you're only counting the money, then you may not admit it now, but our members are here to tell you, and they can hear me, that you're trading greed and fear and greed, and it will consume you. So when our members even chat, I mean, I like to hear, hey, they hit a big trade. Everyone likes to hear that. But when they chat with me, they don't even tell me the money. I don't need to know the money. It's all relative. Doesn't matter if somebody's got 5,000 in their account, 100,000 people are trading much bigger than me. I don't need to feel bad about the money or good about, I don't want to even know. All I know is that if someone has a profit factor over 3 on a day, on a week, over a month or longer, or whatever it is, they've had an outstanding, they're doing well. And if they continue to track their profit factor, they themselves know how their trading is going, honestly. So, probably the most important conversation you could hear, Crystal, if you're just getting started, because most people, there could be people trading for 8 to 10 years. They have no idea how to even keep score. And if they keep in score on the money, it's a hard way to go. And you can get consumed by it. I hope that makes sense. We're very much about trying to get the emotion out of our trading. And the other part is understanding what type of trade you're putting on. Scalping here, scalping there, that's great. That's fine. But if you're going to trade as a business, you will learn in very short order, very, very short order, may only take a month or two, that you need to have some sort of a discipline to be able to do this day in, day out over the long term. If somebody's coming in for, a few days a month or something, that's different and wants to just throw on some things for mad money. But if you're trying to trade as a business, you need to develop a real strong discipline. That other part of understanding the four types of trades, there are, trend fall long, trend fall short, counter trend, counter trend short, counter trend long. It's critically important to understand what those are, and whatever chart you're looking at or whatever it is you're trying to do, especially if you're doing it manually, that you understand what those are, because the characteristics are different, and you need to know that, because it helps, again, set your expectations. So for instance, a person who is counter trading, scalping using counter trades, and maybe you may probably, honestly, Crystal, at this point, you may not know what, you put on an option, but don't really know what it was, which is fine. You can do that, and you can do it for for a few weeks even. But the characteristics of a counter trade those types of trades will need to win, 70, 80% of the time. It's one of the metrics. A trend following system will maybe win 50 some odd percent of the time. And if you don't know what style of trade you're doing, you don't know the expectations of that style of trade, and that's where you can, really get into trouble, and you wind up, trading your money. My account is down. I got to get my money back. I got, revenge trading and, and all of that. Swing Machine is monitoring. This is a trend identification system that's going on. So on a 1 minute basis, or you can choose the interval, 1 minute, 3 minute, 5 minute. This is a technique for trading this. But this 5 minute interval went off at 7:55, and it's still in this trade. And our members have this trade. They may be in here with 1 mini. They may be in here with 10 minis. They may be in here with a micro. A micro contract is up 500. A mini contract is up 5,000. 10 of them is up 50,000 from 7:55. And this is telling them the flight, the trend information they need to know. And this is also giving them important decision-making information they need to know. We still haven't had yet another trade. I scalped out of it, unfortunately, but that's okay. I'm curious how much that trade is up, and I can look. That trade that I took us out of is up $4,500. $4,500. But you know what? It's okay, right? I'm up 241. I'll take it. Not a problem. You don't want to have any emotions of greed and fear. If you have it, if you get those butterflies when you win money, Crystal, you need to find someone that can help you through that. Okay, early. I had to sit down with my wife, Susan, and I'll just share this with you. It's rather personal, but and I'm okay doing it. I said, Susie, we've been together since we're in college, and I said, I love you for everything about you, and I love your emotions. I do, right? And I said, but when it comes to trading, I'm not even sure I want you to do this. She's like, well, why, Don? So because you're going to need to keep all your emotions at bay. And I know what those emotions are, right? So, and so she had some issues, some in the beginning, some struggles. And that's where we began to build out these tools. Now, Susan is a fantastic trader, though, right? It's come like tremendously far, but she has no emotion on trading, zero. And in the beginning, she would want to, at the end of the day, like, Donnie, I want to show you what I did. I want to, I should have done that. Oh, I should have done this one. It was all that emotion, if I only, that's not good. It'll wear you out. Do you have any other questions, though? Oh my goodness. Let me look here. Let me catch up. Crystal says, so the focus is taking the right setups and following my plan. Yeah. Bagger, we'll call you in the next few days. Want to talk about trade station programming I need for my strategy with Case and Rinko. You're welcome to. I like to trade supply and demand zones. Okay, that's cool. We would. Oops, I was just reading those questions. I'm not sure I had the mic open. Yeah, Tim, you're always welcome to call. And Crystal says she trades supply and demand zones. That's great. And we wish you both the best. And you're always welcome to call. We're only going to do this live session on YouTube for about another, probably another 30 minutes or so. But if you have any other questions, feel free. We'll take a peek at Swing Machine on the overall market. The 5-minute 5-minute VIX. This is from oh, this is on a daily. I'm sorry, this is not 5-minute. Let me change it to a 5-minute. It's like, wait a minute, been there long. At 8:35, it started tracking up. 8:35, fear started coming in. The 750 T time on the ES contract, it went short, as we mentioned earlier, at 750. It's still short. That trades up 3,700. The NQ went, and it's only been one since 4 a.m. There's only been one trade, and that's it. The NQ went short at 755. That trades up 5,600. The YM went short at 755, same time frame, 2,300. And the Russell 725, 1,800. Gold short at 655, up 1,000. Oil short at 4:55 a.m., up 3,800. And nat gas short at 8 a.m. this morning, up 1,400. This gives us all of our trend information. This tells us where we are on the field. We don't pay any attention to volume at all. I know plenty of people do. I know they're probably very successful at it, but we don't think volume has any bearing at all on price, at all. Momentum does, either up or down, can precede, but we don't subscribe at all. We don't use any volume on our charts. We don't use, and Swing Machine doesn't take into account volume at all. You'll learn that prices can go up on absolutely nothing. And there are just too many markets today. I think there's a lot of things that, were applicable, 5, 10, 15, 20 years ago, candles and things of that sort. But just too many markets where price can be moved. And so these folks have computers much bigger, much faster, much more leveraged, moving one market against another market. Could be moving futures against options, options against futures. That's what was going on much of the last 2 weeks going into last Friday. So we don't use volume at all. There are 24 trading days. And so these futures, these are big numbers. If you're not accustomed to them, these are trading one mini. But if you want to trade a micro, you could, and there'd be 1/10 the size. Or you could, trade multiple. We're going to slide back to our little strategy and see if we can hopefully we'll get another little order here before we shut down. Options are, we do trade options, Crystal. Options present some additional complexity. I don't want to say they're more difficult, but they're certainly more complex. And so you want to understand before you go too far down the road. You can have a string of winners, but options, you want to understand how they are priced. It isn't, they're directional based sometimes, but sometimes not. Options, the factors that go into pricing options are certainly direction implied volatility, and also time. You can buy options and you can sell options. Different risk parameters. There are times that you want to buy options. There are times when you want to sell options. And you can try to mitigate the risk. They're not as liquid for us as futures, so we don't trade options intraday. They're not that liquid and get scalped over time. But we will and do trade options as positions over days, ideally weeks. We do that all the time. And we have tools and building tools as we speak. In fact, we're sharing with our members now. We'll have a radar that will give you not just the trigger of where you want to end, but it'll also give a recommendation what style of option might you want to put on. Do you want to buy that option? Do you want to sell that option? Do you want to do a vertical credit spread or should it be a debit spread? And options, I'll just say this, is that you really want to, before you go too far down the road, is really learn the terminology and learn how they work. I draw a comparison between playing checkers and playing chess. Checkers, easy. Pieces move, forward and back, right? Very easy game. Chess, you need to know the different pieces. A knight moves, two boxes up and to the left, and a little L formation can go back and forth. A pawn can only move one. A rook can slide back and forth, up and down horizontally. The queen can go wherever she wants. She's the queen, right? Chess is a much more, I'm not going to say difficult, but a much more complicated game than checkers. So if you play chess and all you know is checkers, you're going to be in trouble. So if a person's going to learn how to play chess, you need to understand how, at first, at minimum, how the pieces move. You need to understand that and need someone to, that you can talk to and walk through. But you need to understand how they move. You don't have to have, super sophisticated chess moves to play competitive round of chess either. And you don't have to have super sophisticated, iron condors and everything else on chess. I'll be right back. And again, we'll slide over and take a look at swing. We're getting a pretty good trashing here in the markets. Swing is all over it. Giving another short entry. I wouldn't initiate a short on a daily basis. Here we're not. Down what we would call down in the hole. On a daily basis, we have the S&P pushing into panic, and we finally have the VIX pushing up into euphoria. That isn't where you want to initiate your insurance contracts, right? It'll be coming. The next big trade will be coming out of here. It may not be today, but when it comes, Swing Machine will be on it. We look at the 5-minute interval, 750, 4,400, 755, same trade, 6,500. That's 10 grand. 755, 2,700, 13 grand. 725, 2,100. 6:55 a.m., 1,000. 4:55 on oil, 4,300. 8 a.m. That's it. Those are the trades. They haven't changed any, and they are all down. No need to look at a chart. No need to look at a market profile or volume or anything else. They're selling. Let's keep it simple. They're coming out. This tells us where we are on the interval that we check. This tells us where we are in terms of the scale of panic and euphoria. And this also gives us the mean. We can come back. We can, put any market in here. We can do this with a stock. We can do this with Bitcoin. And we have Bitcoin in here. Yeah, we do. So here's Bitcoin. This is going to be, Bitcoin is a 5-pack Bitcoin. There's 5 of them in here. So this is a big, big contract. This is what's so ludicrous to us. I don't trade Bitcoin. I don't own Bitcoin. But if one had owned Bitcoin and had a stack of Bitcoins, 98 days ago, Swing Machine said, get short Bitcoin at $39,945 a coin back on April 11th. A person who owned a stack of Bitcoins, they could have held them. If they had come into the futures market and shorted a futures contract, which is 5 of them here, they would still have $100,000 in value. One of the things that we're doing here, Crystal and Tim, as well with Swing Machine, is we're not just writing programs here on the radar and here. We're also using these tools to hedge and wedge, right? It's a constant thing. Here in Florida, they've been talking about this spaceship that was, or this rocket, not spaceship, but the rocket that was going to launch, and do the moon thing, and unmanned, right? Amazing. And it got delayed. It's going to go off, I think, on Monday. But it reminded me of the story about Apollo. When that Apollo mission went to the moon, do you know that spaceship was off course? What percentage of the time? Any idea? Off course, going the wrong way. 97% of the time. 97% of the time that rocket was off course because there were no roads. There were no road signs. There's no, it wasn't a direct path. It's space. And those computers, as basic as they were constantly correcting. You're off course, correct, off course, correct, off course, correct, 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 and correct again. So when you're new to the trading game, it's fun in the beginning. It is. This is fun. We love doing this. It's fun, but if you are new to the trading game and you get these emotions about money, and then you start extrapolating out, if I do that, 20 more times or 30 more times, I'll have so much money. And when I get that money, I'm going to do this with it, and I'm going to do that with it. And just know that there is the ground on which you walk is littered with the blood of many a trader. that thought that, including the people at Bitcoin and in America Online and, you know, everything else. We're using machinery to come in and get a little portion of this every day. And our objectives are modest, right? This is a big day, this is a big year, but objectives are modest. It's your chance though, if there are any trading questions or market questions, or you want us to plug anything in, in fact, let's take a look at Amazon. We'll plug it in. Let's plug in Amazon here. Bear with me. Let's go here. We're gonna pull down the, okay, and here we got a little trade going in. Don't take it, you know, don't, you're on delay and don't have the machinery, but what I want to do here is, let me see if I can widen this out here a little bit. Okay, so I'm going to plug Amazon in here. Let's put a little label row in here so we can just separate from us, and we'll put in Amazon. So this is Amazon. Crystal might find this interesting. So Amazon, let's look at Amazon on a daily basis. So Swing Machine has been long Amazon for 29 days. The trend, it's in a dip. Now the profit is $2.84. So it's one share, right? This is set at one share. I can set Swing Machine to reflect 100 shares, $5,000, $10,000, but so $2.93, that's one share. So in 29 days, Swing Machine, you know, said to go long at 124.63, and it's delivered 3 points. Does that make sense? The daily trend is dipping. And this trade is underway, right? Now I could go up there and scalp that, right? We could, but I don't know, you know, I mean, maybe this is going to run all the way back. I don't know. I never know. I never know. Nobody knows. What I do know is that the machine, as long as my electric stays up and my power stays up, that it'll execute and protect my flank. You know, if it turns around and dumps out, it'll get me out. With no emotion, I can be talking with you and not be stressing, right? I can go to the bathroom, I can go to the mailbox, I can get on a treadmill, I can take my dog for a walk within reason, you know. So, but it's pretty cool, right? It's been short that whole time. And they got long right here, and it's already up $300. $300. And I don't have to be concerned with volume. I don't have to be concerned with implied volatility. I don't have to be concerned with time decay. $300, 20 days. That's $6,000 a month. Let's look at Amazon. The pressure is down. The flight is down. right? But on a daily basis, look where it is. It's in here in panic. It's in panic. I'd want to see the implied volatility. My guess is the implied volatility on Amazon is very high. I would, what I would want to do, what I would want to do with Amazon. Now, if I was on a daily basis, right? I want a daily basis. And this is where, and I've been coaching my wife, Susan, to raise her game a little bit, when it comes to options, raise my game, raise each other. We don't compete, but we challenge each other, and it leads to building more tools. And we share this with our members, and they challenge me too. So what would I do with Amazon? Well, first thing is I'd want to check with earnings, where they got any earnings. What I would want to do is I think I would be inclined, I'd want to express a bullish position. I think it's overdone. I think I'm down in here. I want to play. What I know is the probability that price moves from here to back up to 136. This is a probability of 95%, not 100, but 95%. Over the next 20 days, the likelihood is that Amazon is going to move back to 136, the likelihood of 95%. That's pretty cool. Not a guarantee, but statistically, that's what this means to us. All right, so what could I do? Well, I could buy a call at 127.50, and that would cost me so much money out about 30 days. Then that stock has got to go up. It's got to go up 127 plus the cost of the call to break even, right? Just to break even. What else might I do? Well, one of the things I could do, I could certainly buy shares and sell a covered call. That's a conservative way to go. Especially in an IRA account, the government lets you do that. But another way to do it is actually, I could sell a put at 127.50, which is neutral delta. The delta is 50-50. I could sell it at 127.50. I'd receive a credit. I'd receive money. And then I could go down on the option chain, and I could go down from 127.50 to go down like $5, maybe down to 122.50. I'd have to price it out. Go down where the delta is only like 20-30%, and take some of the money that I received and buy a put to protect and define my risk. And I can put that trade on, and then guess what? Then I can go do whatever I want to go do. I just got to leave the thing alone. And I could go to the beach. I could have a life. We will have shortly a Swing Machine Plus that is going to not only tell you where the entries are, but it's going to tell you what might be the best option arrangement you should do. And if you don't know what those terms are, and I know it's confusing a little bit in the beginning, but learn the chess pieces, please. Learn them. It'll be much more fun. It'll be much more fun. It's not that complicated. It's just, you just have to learn them, or you have to have somebody teach you them. And do I know every single option? No, hell no, I don't. No, I've been doing this years. I don't know, right? But we have recently, challenged our own game to do a little bit more. All right, so this trade is up, had a high water mark of 1160. We could take the profit again and call it a day. $1,000, not a bad day, right? Am I going to beat myself up over that? No. But we'll sit tight on this. So let's change Amazon though. What if you don't want to trade Amazon on a daily basis? Well, how small can we go? We can go right down to tick size, which we're not going to go that small. But let's say I wanted to go on an hourly basis. So on an hourly basis, well, that's kind of crazy, huh? How about that? On a 60-minute. Now, 60-minute, you may think is small, but that has to be, you must be able to go overnight on an hourly. We don't get enough hourly signals in a day. They don't come every hour. They may not come. So when is the last time Amazon went short 51 hours ago, Crystal? 51 hours. No market profile, no volume, no bullshit, no moving averages. Short. At what price? 138.94. Are you freaking kidding me? No, I'm not. 10:30 a.m. on the 19th. And the trend is down, completely down. Now, it is getting a little long in the tooth, right? So it's up, it's giving you, it's only $11, but it's per share, right? $11. If you got $11 on the option, that's big, big trade, right? Or, so, and this can be changed to reflect, share count. So that's a beautiful thing. Now, if you wanted to trade Amazon, now I wouldn't, right? We don't usually trade the stocks intraday. Why? Because you're using much more capital, right? But if I slip this down to a 5-minute, okay, so that was today at 10:05. It delivered 2 points today. Well, now, if you wanted to flip options around that, you could, but I don't think that's the way to go, because they're not. Well, Amazon options are pretty liquid, but futures intraday are highly liquid and a lot cheaper to trade. And if you're trading the shares, 100 shares is $12,000. We're not using that much money on these futures contracts. No, not that much. So, any case, but so yes, can Swing Machine and trade anything. If anybody wants to see another symbol, we love to show. It's like showing my baby, right? This is my baby. I want to show you my baby. We work very, very hard on this. We've been using Swing Machine, this very product, for now 15 something years. So will it win on every single trade? No. Is it automatic going to print you money? I'm going to say no. There are times when it feels and looks that way. There are times that it will. You do need to have. So, I mentioned the 4 styles of trading. Count it, trend. This is the way my mind thinks. Trend follow long, count it, trend follow long, trend follow short, count a trend long, count a trend short. 4 styles of trading. There are also 4 styles of trading. 4 styles. MMM, sure. And we'll plug in. Crystal's requesting to look at Triple M. That'll be a fun one because that stock has been hammered. So there are 4 styles. Discretionary, and I'll just mention these what they are, Crystal. You might find this interesting as you're getting started. The first style of trading is called discretionary. Everybody starts there, and you must start there. So you have to do what you're doing, Crystal. But you just don't have to be doing it 6 months from now the same way, right? Hopefully you won't be. You'll be learning and doing whatever, but it's a constant getting better. But discretionary trading is, I see this, I see that, I think this, I think that, and putting on a trade, I make some money, I have a green day. That's discretionary trading. Everybody starts there. Most people will end there in a bad way. But you do need to have very good discretionary trading skills. And we can certainly help people with that, right? Because we're very good discretionary traders. It's just that we choose not to want to do that day in and day out because it gets old after months or years of doing it. So the next level is mechanical. This, looking at this, and we're going to plug in triple M, would be mechanical. This is robotic. And then the next step would be is I could actually have another program running the exact same market, competing with this one, and it's hedging, robotic hedging. It's really cool. Let's look at triple M, MMM. And let's change this to a daily. Let's start first with a daily. So the daily went short 3 days ago. I would have thought it would have been earlier, but okay, 3 days. And at 4 p.m., the trend is down. Now, this is also, so without even looking at a chart on this, and it's delivered $4.50. So that's not bad, right? Not bad at all. But looking at this, am I going to short triple M here? No, I am not. Nope. The likelihood that triple M moves back from 124 to 141 over the next 20 days is 95%. It may not, but it has the likelihood that it's going to move back there in 20 days, 95%. So how do I want to trade it? Well, a couple of things I could do. I could buy the shares, 100 shares, 12 grand. I could go up 1 or 2 strikes and sell a covered call. I could do that in my IRA. Probably be the safest, cleanest, easy way to do it. I could do that. If I didn't want to do that, and I thought, well, geez, I want to get long, but I think it might go to 120 or 122, but then again, it may not. Well, I could go down and sell a naked put at 122.50. I'll get paid a premium. It carries undefined risk, could go to zero, not likely, but I could do that, and I synthetically get long by selling a naked put. I could do that. Or I don't have the implied volatility up here, but I'm assuming that the implied volatility is probably very, very high, which means that I wouldn't want to buy a call because I don't want to overpay. I could buy a call, but I'd be overpaying. I could do a call debit spread where I buy a call and then sell a call. When you do call credit spreads, though, the probability of profit is less than 30%, right? So I wouldn't do that one. But what I would do is I would do a put credit spread. I would sell. In fact, may have Susie look at this as she's listening right now. Ask Susie to look at this. I would be interested in selling. I'd want to know where earnings are, but I'd probably want to sell a 124.50 put spread for 45 days and take a portion of that money and go down around 120, 119.50 and buy a put and then just let it soak. When we trade options, we draw a comparison to when we're trading futures like this, where it's like spear fishing, right? We're underneath, we're snorkeling, we're diving, and we're spear fishing. We're catching the fish right now. When we're putting on options, the way we trade options, it's like deadliest catch. It's like throwing the crab pot over the side of the boat and letting it soak and come back and snag it a little bit later. There's no rush. You don't want to be watching those things intraday. So let's look at triple M though on an hourly though. We can get inside and an hour. So on an hour, well, that was that was even better, right? So now you get inside. Everyone else is looking at the daily. Here on an hour, 65 hours ago, this is a big ass trade. Big. 65 hours ago at 10:30 a.m. on the 17th. Okay, she just took a profit. Did you see that? While I was talking, I didn't do that. Machine took the profit. Now, once again, my trading instincts are a little bit, I don't want to do what I did again before. We could collapse, but I'm on guard here. See that little swing point? If we don't take that out, this thing could reverse here. So my instincts tell me the risk is picking up here, despite. So I am going to intercede. I'm going to close that trade. Bear with me. I'm just going to close that, knock it down. And I need to reset the strategy. And you might say, well, Don, why would you do that? You second guessed it before and it cost you $4 or $5 grand. And you're second guessing it again. I mean, you shouldn't do that. No, that's not my lesson. I'm not going to get them all right. And the point I was going to make earlier is, although we have trading robots, you do need to have acquired trading skill. And so you want to be able to, guide the robot, right? And, I'm looking here. I know where I am up in here with NASDAQ. We've had a, huge run. I'm looking at that swing point. If we don't take that swing out, there's a much greater degree that we're going to rally up. So, and maybe I just take the profit and call it a day. But Triple M 60 minute at 10:30 on August 17th, the trend is down. The short was at 147.75. Now, I don't know if I would have even bought a put there, right? I'm not into, I would have rather have maybe, done sold a call credit spread, or, but could have done any number of things. But it's delivered not $23, 23 points. 23 points. That's huge, huge trade. So we're diversified, Crystal, and those that are here. We're diversified not in where we put our money. We're diversified in what and how we can trade and how we go about it. So we can trade stocks, we can trade futures, we can trade options. And but we started this whole conversation earlier with some of the basics, the 4 types of trades, the 4 style of trading. And then we also were talking about, profit factor. It's those basics, it's those fundamentals that are often overlooked or ignored, or people just don't know. And I'll leave everybody with this one that our members have heard ad nauseum. The 4 stages of learning anything. Do you know what they are? The 4 stages of learning anything, whether it's options, whether it's trading, whether it's quilting, fly fishing. You must first become aware of something you don't know. And you must have an interest, right? So I live in Florida, and we could do, which we don't spend any money on advertising. We're really, and we do the YouTube sessions, but I don't go and do a tabletop display like at the boat show or the home show and say, you too can be a trader. Come over here and look at this. Oh, you can be trading and you can quit your job. I don't do any of that. A person needs to have an interest. So my sister, love my sister. She's really, really interested in quilting. I have zero interest in. She goes to meetings all over the country, and she's really, really good. And but I have no interest in quilting. So I'm never going to learn what she's going to do. I'm never going to be a quilter. And guess what? She has absolutely no interest in trading. Zero. She'll say to me, Don, I don't know what the hell you're doing. And I just gotta, how do you do that every day? Oh, not only does she not interested, it's, it's probably disgusting. So the first step is, if you're going to learn anything, you have to have an interest. The second step is you have to be aware of what you don't know. And I give Crystal credit because I asked her a question, and I'm not blowing smoke your way, Crystal. I talked to a lot of people during a week, a lot. And you just said, I asked you what profit factor was. You're like, I don't know. Or I asked you how do you keep scoring? You're like, I don't know. Do you know, I had one gentleman call. He had been trading, he said, for 8 to 10 years. I said, have you made any money? No. I'm like, I wasn't even sure why he was still doing it. And I said, do you know what a profit factor is? And he goes, no, but I could look it up and tell you. I'm like, what? What? What are we doing here? Why do I want to stay on the phone with you so you can look it up and tell me something you can look up? I'm like, it's okay. And what it told me was he wasn't okay. He wasn't okay not knowing something. I am the dumbest guy in this market. I will arm wrestle you. I don't know anything about market profile. I don't know, man, I don't know what the Nigerians know about options and iron condors. And oh my God, there's so much I don't know. And I will arm wrestle you for the right to say that I'm the most ignorant. That's where I want to start from. So the first stage, though, of learning something is becoming aware of what you don't, you have an interest, become aware of something you don't know. And then you say, hey, that person is a hell of a quilter. That person's a hell of a fly fisherman. That person's doing some trading stuff that I've never seen before. And Crystal, you could be on the internet, save the page. You're never going to see anybody doing anything like what we're doing. Not even close. I've never seen it because I look, nothing like it. And, but you'll say, hey, that is really pretty wild. And now then the next stage is you say, okay, well, I want to learn what that person knows. And that's where the mentoring relationship begins. And that's what we're about. That's what Stock Market Academy is. We're a mentoring site. And we only want folks that want to be here. We only want folks that want to learn. And we will provide our perspective and help and provide the tools and hopefully save you some time. The goal is to make a person consciously competent where they become a really good quilter, a really good fly fisherman, a really good golfer, a really good trader. And then the last stage of learning is when you become unconsciously competent, where you are trading with about as much thought and as much thought as you have when you brush your teeth. You'll have none. When you first drive a car when you're a kid, man, you're so excited. You get in that car, and I know what I did. I drove down to the beach, see all the girls, and man, look at me drive, and had the windows down, had the radio on. Man, look at me. I felt such a sense of freedom, excitement, energy, what it could mean. Today, I get in the car, I go to Lowe's, and I get home. Sometimes I can't even remember which route I took. It's like there's no excitement. They just get in the car and drive. So I don't want to take away anyone's excitement on trading, but I think it's something you want to work through. Thank you, Dennis. That is one of our members. Hey, Ted. Ted is pawing at me. All right. Crystal, it's nice meeting you. You're all welcome. We're going to need to sign off. We'll take a look. If we get a market rally this afternoon, rest assured, you'll see a picture of it. and we'll be on it, and the machine will be on it too. I wish everyone the best. It was nice meeting you all. I'll wait, but there's a bit of a delay, so I'll wait another minute or two. But we gotta get focused in. It was a pleasure. Thanks. I hope we opened your eyes to a few things.